All right, well, let's get back to our big stock story of the morning, of course. Uber shares, as you saw, they're under pressure, at least thus far. The company did miss estimates on the top and bottom line, but there is an awful lot going on here under the surface that could at least make it a bit of a confusing quarter for many investors. So joining us now exclusively from San Francisco to help explain it all and answer our questions is the company CEO, Dara Khosrowshahi. Good to see you, Dara. Thanks for being with us.
Good to be here. Thank you.
As I said, and Jim and I were talking, the $3.9 billion in terms of the compensation expense related to the IPO, the driver appreciation award, a lot of different moving parts here, a lot of adjustments that people have to see through. So let me just ask you, if you can cut through all that, what really is the revenue growth rate for this company and the take rate that we're looking at right now and that you expect in terms of the guidance for the future?
Yeah, listen, I think the IPO for us is a once-in-a-lifetime moment, and it was a really important moment for the company. And some of what we did, like the Driver Appreciation Award, almost $300 million that we put in the hands of over 1 million drivers globally, were really important for us to do. It created a messy P&L from an accounting standpoint that I think is hiding underlying trends that are actually very, very healthy for the company. If you look at the trends of the company, and this is what's going to matter long term, you've got gross bookings over 16 billion, growing 37% on a year-on-year basis. You've got trip volume, and trips or units growing 35% year-on-year. You've got audience, monthly active platform customers, now over 100 million, growing 30%. And the actual revenue growth, and you do have to back out the Driver Appreciation Award because that was one time. It was important. We wanted to do, but it was one time. The revenue growth, excluding the Driver Appreciation Award, was up 26%. And what I did tell our investors is expect that to accelerate into the back half of the year. The back half of the year, you're going to see, if trends stay the same, revenue growth in excess of 30%. And when you look at profitability, we beat our own internal targets. We beat street targets as well. We came in at a loss of $656 million. It's still a big loss, but the losses are improving. The take rates are improving.
Right. And you went on in the call to say at maturity, of course, you can be cash flow positive. I made I discussed briefly your comments, some of your other comments, and I'd love to get a little bit more from you on them, which is if you do your jobs right, and you say there are always trade-offs to be made, you can make the trade-offs where you can scale expenses and get more efficient in marketing and incentive spend while improving the bottom line. What examples can you give to me right now of where you are doing that or where you would expect to do that in coming quarters in terms of increasing the possibility of profitability and the overall contribution margin?
Listen, you see it this quarter. Again, if you back out some of those one-time expenses, we went from a loss over $800 million to a loss of $656 million. We got much more efficient on the marketing front and actually took marketing as a percentage of revenue down while we were still growing the top line over 30% as well. So we are in a situation as far as the network effects of this company. This is much more than just a rideshare company. Now it's a transportation company where we don't need to continue to increase the marketing and incentives. We can go in with loyalty plans, both for riders and drivers, that are going to add to leverage in the company and ultimately improve the profitability of the company. And listen, this is a marketplace company that has over 20% revenue margins, and revenue margins are increasing year on year. So not only do we expect to hit kind of cash flow break even, but we expect this business to be very profitable at maturity.
And this is the big spend year. Spending from here starts to decline. Is that true?
I think that our spending declines as a percentage of revenue. So when you're growing trips 35% year on year, your spending is going to increase. But we're going to get leverage, we believe, on the marketing line, and we're definitely going to get fixed cost leverage going forward. And I think that this quarter proved that out. And I think we have to keep hitting our marks in the next couple of quarters. It's a super competitive marketplace, but we're confident, and we like what we saw operationally in this quarter.
Dara, this is Jim. Good to see you, as always, my friend. But I have a question. I know you're involved with history. I know you know history probably better than most CEOs. Frederick the Great said, "He who defends everything defends nothing." Latin America, Uber Eats against a DoorDash competitor that plays with wampum. I mean, why are you in these markets where you know you have to defend everything and it's going to cost a fortune?
Well, listen, Latin America for us is one of the best markets we have in the rideshare business. It's a huge market. The GDP there is increasing. You look at Argentina, for example, Buenos Aires now is the 5th largest city for us globally in terms of trips for a rides business. So we know how to operate in Latin America. The Uber name is beloved in Latin America. And we think that the platform, the power of the platform is that we can take one service and then add on other services into the fold as well. So just like Uber Eats has become a part of everyday lexicon to Americans, we think the same can be true in Latin America. Is it going to take investment? Yes. Is it going to take execution? Yes. But we have an enormous advantage in the Uber brand and the platform that we built locally. And there's no reason why we can't be just as successful in Latin America as we are in the U.S.
All right, you let me spend some time with Lior Ron, who I think is a genius. He does Uber Freight. The analysts seem to be, let's say, lukewarm about Uber Freight, that you're spending a lot of money and it happens to be the wrong time. Can you give us more granularity, because it was not available on the conference call?
Yeah, I think Uber Freight's growth, if you look on a year-on-year basis, the top line is growing over 150%. If you look at customer cohorts, our customers love us. We're signing up new customers, and the use of the customers kind of year on year continues to increase at a very significant pace. The freight industry hit a soft pocket in the first quarter and second quarter of the year. We went in and adjusted to that soft pocket to sell much more aggressively into accounts. And if you look at the graphs for Uber Freight right now, the growth rates are very, very exciting, and we remain quite bullish. It's going to take a couple of years, but this is a multi-billion-dollar industry, and we think we've got kind of the best solution with the best tech and a great brand, and we think we can succeed there very much so.
You know, competition, of course, is one of the key concerns of investors here, whether it's Lyft here in the domestically or Didi in so many other markets around the world, and what they believe will be a constant pressure on pricing. Is it starting to alleviate at all? The possibility, for example, of Didi in London, is that going to conceivably be yet another battle you have to fight?
So we have competitors in every single market, right? If you're going after a $10 trillion plus marketplace, you're not just going to have one competitor. You're going to have multiple competitors coming in. We happen to be the biggest in the sector, so when competitors come in, they want to take us on. When you look in the rideshare space, the competitive environment is, I'd say, stable to getting better. You saw rideshare take rates actually quarter on quarter increase by over 100 basis points. So while it's competitive, and we expect to be competitive, we've competed against competitors in Paris and London, and every single city that we operate in, we have multiple competitors, and usually we have 60, 70, 80 shares. We compete, but we win. The Eats market continues to be very competitive. So while rides, I'd say the competitive environment is stable to getting better, we're going to see a lot of competition with Eats. There's a lot of capital coming into the category because it's growing. And I think Eats is going to be a battle this year, next year.
Yeah, that's interesting you mentioned capital coming in, because it does make me think about one of your largest investors, Masayoshi Son, of course, and Softbank. They're raising Vision Fund 2, Dara. And conceivably, some of that money is going to go to those very companies that you are just talking about that you'll compete with. They're going to have sort of unlimited war chests to cut pricing in, for example, the Eats market. How do you view that? Do you ever go to Masa and say, give me a break here?
I think a lot of people in life would want Masa to give them a break, but Masa's just going to keep going. Listen, I think that Masa is a businessman, and he doesn't throw good money after bad. When he puts in money into companies, it's because he believes in them and he thinks that they're going to be category leaders. We are their single largest investment on a global basis. So I think our interests and Masa's interests are very much aligned. They know everybody. They understand the markets. And I'm very, very happy to have them as an investor. And I consider Softbank a very good actor in this marketplace. They're going to put money against the markets, but that's going to expand the markets. And we have been one of the chief beneficiaries of that.
Right. You know, speaking of some of your investors, the lockup is fast approaching, or I should say it will expire. Are you expecting a lot of potential sellers to hit the market when they can, in terms of insiders and the like who are locked up from selling after the IPO?
David, I like to focus on the things that I can control. My honest answer is We don't know. There are going to be some investors who we believe are absolutely long-term investors, like Softbank, and then there are going to be some investors who've made a ton of money and they deserve to liquidate some of their shares. If we focus on building the business and we focus on continuing to grow at 30+% rates, continuing to increase margins, the rest will take care of itself. I'm actually looking forward to getting the lockup behind us, honestly, because I think that people talk about it too much, and really what we're trying to build is a business that lasts, a business that can attract the best talent in the world. That's what I'm spending my time on.
All right, Dara, we got to go back over this free money issue in Uber Eats. The DoorDash, I'm familiar with DoorDash, deal with them personally because of I own a restaurant. But it's curious to me. DoorDash has 360,000. They say you guys are up there. They play with free money. They bid and got Caviar, which is the Square delivery. They paid $400 million. Did you try to get Caviar, and did you think that they overpaid for Caviar because they're not public?
You can expect us to look at every single deal out there in the marketplace where Uber, everybody wants to talk to us. And we took a look at Caviar. It's a great brand. It wasn't the right deal for us. I can't speak to DoorDash and whether they overpaid or underpaid. We just think that the best growth vector for us with Eats, especially in the U.S., is organic. We are now increasingly with an Uber-wide loyalty program getting users into Uber Rides and then Uber Eats and essentially moving the users back and forth between the two. We think it creates a customer acquisition cost advantage over the other players. We think it creates a lifetime value advantage over the other players. And what we're confident of is that our Eats business is much more efficient from a marketing standpoint than any of our U.S. competitors. That's the power of the platform, and that's really where we're focused.
That is a very good point, and I can't underestimate the lifetime value of a customer. There was an existential moment in this conference call, Dara, where you talk about rougher, poor areas, inner city. They cannot afford, the consumers can't afford, I'm quoting you, the increases in price. What are you going to do about that? Do you think it should be two-tiered? Do you think it's fair that people who are not wealthy can't afford you? And don't you think they should get a break? Why shouldn't people be treated equally?
I think it's a tragedy. Listen, I think that when you put into law laws that are not market-driven, you wind up helping special interests and you hurt other people. And the fact is, in New York City, because of the new TLC rules, we've had to restrict the number of drivers that come into the marketplace. We've had to increase prices, and there are many, many New Yorkers who can afford it, and our business in New York is doing just fine. But our business in neighborhoods that need transportation the most, often mass transit, doesn't go into those neighborhoods. Our business is suffering there, and that's just not fair. Really what's happening in New York is there's a secondary medallion system being kind of created with this limit on the number of drivers and the number of cars. And we know that the first medallion system ended in tears. And now we're doing it again, and we think it's a tragedy. We're doing everything that we can to get our message out in New York City. And eventually we think that good logic will win, but right now we're in a pretty tough spot. We will do our best to get out there and make sure that our service is available to every single consumer any way that we can.
Speaking of that and other services, why are you promoting, to a certain extent in certain metropolitan areas, the use of mass transit? What is the overall benefit to your user from providing that information?
Well, listen, our mission is igniting opportunity by setting the world in motion. We want to move people, and we want to be that service where if you're going from point A to B in a city, you wake up, you come to us. And we started with cars, but what we're trying to do is get you to where you're going, and we think that mass transit is an incredibly important part of that equation. It is good for business. The more people come to Uber, to check Uber, to come for information every day, the more of an opportunity we have to offer our services for them. At the same time, it's great for transit as well. I think you've seen that transit ridership has been flat in many cities, and we think that if you bring the Uber service, the delight of a customer experience, the ease of use, all the way from information to booking, we think we can become a really important demand generator for mass transit. It's good for the environment, it's good for the city, ultimately it's good for the consumer, and we think it's good business as well.
Right. Well, as you've said, your main competitor is car ownership, not necessarily any of the other aforementioned competitors in the marketplace, Dara. You know, we've covered a lot of ground here in the last 10, 15 minutes in terms of your view of the future. But do you feel like you have a lot of visibility into your business at this point, that you can be confident in some of the predictions you're making in terms of what you're going to see in various markets and what it's going to cost you to continue to compete?
I think we've got very good visibility on our own business as far as the business model, how we can tweak and how we can drive more efficiency out of marketing spend, out of incentive spend, out of overheads, et cetera. The team is very much aligned and executing on that. I do think that the competitive environment can change quickly. And last year, we had the competitive environment become much worse, frankly. And this year, the competitive environment is improving pretty consistently. And that is something that, to some extent, is out of our hands. But I do think that it's something that we can control by being an incredibly strong competitor, by pushing back where we need to, and then bring in profits where we can. We think that we can not only survive, but we can really thrive in this business. Again, when you look at the top line growing 37% at these kinds of scales, at 16 billion plus in bookings, these are big businesses, and I think that we're going to be the winner.
All right, so Dara, can you talk about, I know you care about impact per share. You've always been conscious about this. Can you talk about empowerment for a second versus exploitation, frankly? We often read that the drivers are exploited. I often think that you provided empowerment, people who would never have a job, particularly Uber Freights, Hispanics, Sikhs, usually discriminated against. Just tell me what you're doing for equality.
Well, I think as far as our driver partners go, one of the really important parts of where we're taking our relationship with the driver partners, the number one reason why they love to use our platform to earn is they can use our platform anyway, anytime they want. They are their own bosses. They do exactly what they want. At the same time, with society now, there is an expectation of a safety net, health care, minimum earnings, et cetera. And we are actively now engaging on that front with regulators. We want to be part of the solution where part-time work is not something that you look down on, where you can have your freedom and safety net at the same time. And we absolutely think that Uber can be a leader there. That's something I take very personally. And if that's something that we haven't accomplished as a team over the next couple of years, I'll consider that a failure. But we've got to have dialogue. It's got to get past the emotion. It's got to get past the politics. And it has to serve our driver partners. And that's what we're trying to do.
Dara, the last time we actually saw you in person, of course, was during the initial public offering here on the floor of the NYSE. Any regrets in terms of that day? The stock continues to trade $5 below the IPO price.
Yeah, listen, it was a great day as far as bringing in, getting the company public, getting us funded to that path to profitability as well. I think we've got to do a better job in terms of telling our story to the markets. I think that the company is executing very, very well. Somehow it's not getting through the noise. And, you know, I think that at some point you just put your head down and you execute, and the market short term, while you can't control the short term, long term the market will take care of itself. And I think that's what we're focused on right now.
Right, but you've got to get people to believe in that ultimate goal that you can be a cash flow machine at maturity. And for now, even on EBITDA loss of $656 million, I would think that's an uphill battle in some ways. Do you agree?
I think that when you have those kinds of losses, listen, we take those losses seriously, but you've got to look at the fundamentals of the business. This is a 20% revenue margin business at 50, 60+% scale. Every single year, we basically add $15 billion of gross bookings at a 20% margin. Revenue margin. So that's essentially $3 billion of revenue that we're bringing in-house, and you put that, against a $656 million quarterly loss, and you see that with a couple of years of $3 billion plus revenue coming in, you're going to be able to cover those kinds of losses. I am very, very confident of this. The last business that I ran, Expedia, was running at 11, 12% revenue margins. So on 11, 12% revenue margins, we were able to get to a 20% EBITDA margin. At a 20% revenue margin here, not only do we have to get to cash flow break even, but we're going to get to significant profits here long term. It's going to take work. We're very clear-eyed about that. But believe me, we're very confident we can get there.
And finally, Dara, the last time again we saw you, Mr. Kalanick was here as well. He was up there far away from us. The former CEO prior to you, the founder. People say, listen, you have done an excellent job to a certain extent addressing some of the cultural issues that were present at the company when you took over. But they do wonder whether Uber has lost that sort of founder-driven urgency that some of these companies have when the founder continues. How do you address those who say or wonder whether you guys still have that fire?
I think we absolutely have that fire inside the company. We just 2 days ago we had kind of a day where we sit down and go through all of everything that we're doing technically. Meeting started at 8:30. It didn't end until after 9 p.m. at night. We got in that room and we resolved every single situation. So listen, the founder mentality, that edge, the fire, is absolutely something that we want to keep going at the company. It was a big part of what made the company successful, and I absolutely believe it'll be a big part of what will make Uber successful going forward.
Dara, we certainly appreciate you taking the time with us this morning, helping us go through a complicated quarter, and look forward to seeing you in the future. Dara Khosrowshahi, CEO of Uber, joining us from San Francisco. Thank you.